All right, good morning, everybody. How's everyone doing today? Hope you all had a good weekend. Markets are on the move. Hey, Miles. Hey, John. All right, I'm assuming you guys can hear me. Do a quick look at what's happened so far. Well, the markets are opening in a few seconds, so let's pay attention to the Dowie Mini, which has a long trade here, a get in sync trade at 246. That one triggered in very quickly. Be really quick on your toes to grab that. And now a short at 237, targeting 213, and the stop's at 276. But the long is still going also. A little tricky when you get in sync with an earlier setup. One did touch the short entry there. Looks like it wants to go higher. We'll see. When that 20 SMA moved up, adjusting around it a tick would have been a good idea. It just happened very quickly. Crude oil's already one and done. I mean, it's in this trade here. You can see on the left. I'll show you in a moment. Starting at 9, a big winner. Good morning, Crypticon. Good morning, Al. Nice to see you. Oil is up a lot. Over $2, up 4.33% already. 4.3. It's a big move in crude, $2.69. Higher. Let's see let's keep an eye on the YM because this trade, flipping along again. So a little bit of the morning, a little bit of range bound trading, but now it's long. This is kind of hard to trade. It's moving so fast like this, but it's long now at 62, anywhere from 62 to 66. This can go up or down. These signals are kind of getting in each other's way here just because of the trade off the blue line. So actually, that's an optional trade and not really part of the original trade plan. So that's kind of throwing a wrench in the gears here. Keep an eye on the YM. Let me know if you're in the YM. That's a tricky market to trade. Currently long with that stop and reverse. 62, targeting 83 and 95. And higher, 306, 318. Stop would be at 234. So it's not too late to get that. The other trades happen really fast. Quick look at oil while YM's figuring it out. We got the one and done trade today. Really nice move straight up. That came 3 minutes after the start time, hitting all its targets, and the trailer is now at 64.74. You can even put it at 73 just to get it below that blue line there. Good morning, Pamela, Armando, Gavin. Hope you had a nice vacation, Al. Had a really nice big move in heating oil with Catapult. I think it might have happened a minute too early. Pound Aussie has a short, 9039. All right, so the blue trade on the YM heading higher, finally working its way out of this mess. Really, the yellow trade would have been the one to stay with when using the blue line, because you don't, even though we made a stop and reverse adjustment of 2 ticks, once that blue line came up, that one came up to where it was close enough to where, you want to get a tick below that. And that would have kept you in the yellow trade, which would have been the best way to handle this, but it happened so fast, it was really hard to figure it out. After the fact, when you see what happened, you really want to respect that 20 SMA, because it marks pullback areas, and it's better not to get short in front of it. If you can make a tiny adjustment around it, you're better off. The YM finally breaking out to the upside here. And the stop should move to break even if you did happen to grab that blue trade. On that pound Aussie, adjusting off the key level to 39, keeps that trade flat so far. It does come down and trigger in. The stop would go to 9056. All right, so far we're looking at Spotlight. Unleaded gas, right at 9. You have to come back to here. And you had a short trade that probably was way too fast to grab unless you're anticipating. I mean, you would have had to have anticipated that one rather quickly. It did hit target 1, and then the next trade, a little more time and a little more orderly, also a winner. And if you miss that one, then the next trade was also a winner. So there are 3 in a row in there that hopefully any unleaded gas traders with Spotlight should have done pretty well there. Got the Catapult unleaded gas chart up here. And this one starts at, I always forget, 9:05, I think. 8:45. Nope, this one starts earlier. 8:45. And you end up with break-even trade. Well, it did hit target 3. I think I've got this set to target 4, but target 3 or 4, that one did hit target 3 for a nice scalp. And then your scalp and run, your very next trade, hitting its targets 3 and 4, and then a nice runner on up. So that's Catapult with unleaded gas. Morning, Ron. Whoops. Oh, this is one of those specialized heating oil. That wasn't the one I wanted. This one, maybe? There. Oh, no, that's not it. Here. No. Well, let me see. What's this? I think this starts at 9:30, actually. It's probably the one I got here. Oh yeah, this one's from 9:30. So this one's still waiting to go. So that is a short. That's a short on heating oil, Catapult heating oil, 9764. Targeting 3.4 and 2.4, and the stop is at 9.6. Well, 9.4. We'll put it at, well, let's see. No, 9.6. Sorry, 9.6. We'll adjust it one tick. So that trade's going to cancel, actually. No, hasn't canceled yet. It will in a moment. Oil. The energies want to go up this morning. Here's the trade I was talking about on heating oil. That was at 9:05. I think that's when this one starts. This one starts at 9:05, I think. Let's look. Yeah, this one starts at 9:05. So I got this one at 9:05, and then one I just showed you a moment ago at 9:30. Two different trade plans. And the short on heating oil did cancel. Don't forget to hit the like button on the video on YouTube for me. And of course, if you have any questions, anytime, just type them in. Quick look at Counterpunch with the 377 tick chart, either starting at 850 or 9. 850 looks like it was kind of a tricky. You had the purple trade, and that one comes down and loses, and then the white trade, two losers in a row. Then you get the nice winner when starting at 850. So you get the nice winner on the white trade, and then a second smaller winner. So starting 10 minutes before 9, obviously not as good as if you're starting at 9. You avoid one of the losses. You still get the one loss here, and then the nice runner that comes after, and then the third trade that wins right there. So the 377 tick, a little messier than the range bar. As you can see, the range bar definitely was a cleaner, smoother chart, and Spotlight doesn't try to catch all those trades. So right at 9 o'clock, it avoided this messy, the fake breakout up, fake breakout down. That's always treacherous. Counterpunch fell into that trap, but Spotlight avoided it. The Spotlight doesn't try to catch every move. It looks for different things to create its setups. And as a result, it tends to win more at, better numbers, better metrics than Counterpunch. As a general statement, of course, there are specific things that happen where Counterpunch might even be considered better at times. But in general, I think Spotlight's better. Spotlight came later. It should be better. Soybeans, right at 8:30. I mean, look at that bar at 7:32 and 2 bars later, 8:30. It just shows you what happens when the market's dead and then finally wakes up. But soybean kicks in and comes up and hits its target 1, 13 ticks, and gets it done. One and done. That's Counterpunch. Soybeans, this is a long-running plan that delivers the goods pretty quickly. By the time it hit that target, you're like 30 seconds in. Barely have enough time to get that trade in there. I think you do. You're still, you got like 18 seconds by the time it comes up and hits it here. So if you're on your toes and you believe in your plan, you get that trade in, you're basically going to be done in a matter of seconds. It's one of the things that we like about the grains, because you practice it and get good at it. And talk about finishing fast. It's usually what happens. Or not, I shouldn't say usually, but often what happens. So we've got a boot camp coming up on Thursday, the Catapult Advanced, all about the trade assist and the automation, happening this Thursday. Emails should have started going out. I don't know if they have. I didn't have time to check, but I think my team sent them out, or if not, they will be going out today, I'm sure. For those interested. Do a lot with the automation with Catapult. By the way, a long trade did just trigger in here on Catapult heating oil. $98.30, $98.31, somewhere in that area. That one's targeting. Well, it just hit target too. 98.50, 98. Am I looking at the right one? Yeah. 98.60, 98.70. So it's coming up to 98.60 here. It's target 3. So stops should move to break even at this point. If anyone took that. Yeah, hey John, you don't need to worry. I'll send something out. You'll get the info. You won't need to register. You just well, you might need to, but you'll get the email about that. So no worries there. I'll make sure those go out. Claude, we're gonna have there is a session for Ninja Trader during the boot camp. Yes, we've got Will coming in who's going to walk through that. It won't be as long as the last Energies boot camp, which was 2 days. We should be able to get this done in 1 day. I'm always open to a second day if we find we're going to need it. The automation is fun. I mean, I like doing these boot camps with the trade assist. There's so much material and so much great information, and it's such a powerful tool. Learning how to use it is a I mean, it makes a big difference because there's ways to not use it. You have to be very careful about curve fitting. People always wonder why they get such great results with their optimization tests, and then going forward it just falls apart. It's tricky. Trading is tricky in general, but there are techniques to use that help avoid that, or at least mitigate that, and that's what I like to focus on. And with all that being said, there's never any guarantees. One of the things I look for is there's a video that's probably going to go out today or soon. It's about robustness. It's figuring out if a trade plan is going to continue to work going forward. And so I just did a video on that, and I believe that's getting mailed out as part of the boot camp promotion. But when you see something like this, I mean, there's a long period of time here where nothing seems to happen, right? It did make a new high barely and then poke down again until it explodes up. But what makes this chart impressive, apart from there's such hardly any drawdown at all, is 657 trades is a lot of trades, and that's going all the way back to April. You know, here we are on August 23rd, going all the way back to April with a 76 win rate, 76%, and the nice profit factors, fairly balanced up and down. And that's the kind of thing you look for. And then when you're working on this, you want to you don't start trading it right away. You want to watch it going forward. That's what's important. So like right now, I forget when I created this. It's probably in here, I believe. So the curve to the left even went up from way down in here. I mean, this has been going up for quite some time. But when it got to here, that's where I really kept my eye on it, because you want to see it recover. Here, you want to see it recover. Like right now, it's drawing down a little bit, isn't it? You can't be hitting all-time equity highs every single time. You get some losers, then winners and losers and winners and losers, but you don't hit a new equity high until you break out to a new high watermark. Look at this one. That was quite an explosive move that broke out of that sideways pattern. Remember, this is equity we're talking about. And this is with like no optimization at all. Maybe just quitting goals and start time only. That's the kind of thing that you can start to feel confident in. There's a bunch of plans. I haven't presented them all because I'm making sure they're going to continue to work well. I don't want to just throw a plan your way and then only to learn that it wasn't very good. Like, this is an interesting one. I'll probably go over this one during the boot camp, but you could see where the growth happens, but right back in here when it hit new equity highs on July 22nd, that doesn't seem like that long ago. It was a whole month ago. And then this happened. That's pretty hard to trade through. You wonder if it's going to fall apart. And then look, this just occurred in new equity highs. And what makes this one interesting is it's well balanced. Still not maybe as good as the other one, but a 171 profit factor is not bad. I would like to see the average net profit per trade higher. This one's using target 3 and trail. It's only 2, power of quitting 2. But these are the kind of things you look at. There's a lot of trades. That's a good sign. 389 trades is a good amount. But anyway, there's plenty of figuring out which one to use is tricky. It really is. That's why I like to have several irons in the fire. Just think of them as research projects. Here's the one and done trade today on heating oil. First trade of the morning. You can see it hitting all its targets. Now the trailer is moving up. This plan continues to do well. Now, is this trade going to hit new equity highs? I don't know. We were just looking at this. You can see it's come off a little. I guess it just depends on how big of a runner it puts on. I mean, I'd be surprised. It probably won't hit a new equity high on this winner. Probably needs a little bit more than just one winner to get higher. The last equity high was on the 19th. It was just a few days ago. So the last equity high was on Thursday. So here we are on Monday. Barely off the equity high, but a nice winner to start the session. Learn a lot from the automation. So just to review, pound Aussie is still short. I mean, it's still got the short signal. At 9039. Whoops. I'll be right back. All right, sorry about that, guys. Stop on heating oils moved up to 98.49. Let's see if it'll hold. We may not get a runner, or who knows, but looks like it's gone up a lot already. Kind of puts it into perspective here. That's a low of 95.13 all the way up to 99.04. Nearly 400 ticks higher from bottom to top. And the stop is at 98.53, and maybe it will hold. Let's see if it'll continue higher. You can see the lines already turned red. Claude, more to your point and question about NT8, I do realize we have a lot of NinjaTrader users, and so I made a point of being sure we would cover that. And Will is good. He knows the inputs and what they do, and I'll probably have a conversation with John as well. I don't know if John's with us this morning, but we'll see. Trying to cram a lot in a short amount of time, and not to make this boot camp too long. I know that it tends to tire people out. We'll see how we do on it, but I'll definitely make sure Ninja's covered appropriately. And then, of course, there's always follow-up. Any questions or anything that we need to follow up on, we certainly will. And you can see heating oil hitting a new high now, breaking out to a new swing high. And the stop held. That purple line does a really nice job of trailing the 14 EMA. 98.66 now, the stop. I think that's the 14. That's the default we use. And the stop now moving up. Nope, not yet. It will move up. There it is. 74. 98.74. So this is turning into a runner. That stop is pushing up past target 4. Once it gets past target 4, it's officially a runner. It's a scalp until the trailer passes target 4, and then it becomes a runner. The scalp and run. Yeah, so Len, this one here, there's more than one. I was just talking about that a moment ago. By the way, welcome. Hope you had a nice weekend. This particular one just looks at a brief 2-hour window between 9:30 and 11:30, which I think is better for the trade room because so much happens early on. Like there's so many other things happening, and I don't even open the room at 9. So we do have the plan that starts at 9:05. We have the unleaded that starts at 8:45. This one starting at 9:30 seems good for the trade room just because of how it fits in timing-wise. Stop now is at 98.83. Hey, John, didn't know you were here. Nice to see you. Good morning. Well, the boot camp should start at 11 a.m. Eastern. I anticipate at least 4 hours, maybe 5. Yeah, let's just look at the version here. I think this may be your version. No, this is 1C. You're looking at 1D. And the difference between 1C and 1D, I don't even remember. But this one has the 10-tick entry. So that's a little different than some of the others. Maybe the only difference on the calculator, there could be some differences with its power of quitting and start time. But basically, yeah, that's it. That's the only change, is a little bit more on the entry. And that keeps it cleaner. That avoids some false signals or losing trades because of noisy entries. Just take a quick look again. And this one, over 600 and something trades, it just keeps going up. It's pretty decent, a little better on longs and shorts, but that's obviously because we've been in a pretty extensive uptrend with energies, notwithstanding the recent pullback. The stop just went up a little, by the way, to 83. So the other thing that might be different, other than the 10-tick entry, could be the power of quitting. This is 6 winners or 4 losses, whichever happens first, a total of 6 trades. So what makes this one interesting, and we saw this last week, you can get 6 winners in a row. What we saw last week out of 10 trades, we saw 5 winners and a break even on Thursday, and that's when it hit new equity highs. And then on Friday, I think 1-3 broke even on 1 and lost 1, or I forget. I put it in Discord. But notice that this says start time 9:05 and stop time noon. So that's being overridden by a very interesting set of inputs up here. And we'll go over this in the boot camp, but this is your setup start time, 9:30 and 11:30. So what that will do is it won't even print trades until 9:30. It just keeps everything gray like this. And it changes the sequence of trades a little bit. It's interesting how that works. But anyway, it also keeps you focused on only the trades you should be focused on. But other than that, I don't see it. We'd have to look at 1D, version V1D, to know the difference, because I just don't remember. JDS asking if I test for start times. That's one of the main things I test for. The 1D happens to have much more trades. I mean, I could find the 1D and we can compare it. Let me see if I have access to it on this computer. One second. I always do different versions because, again, one of the things we'll go over in the boot camp, but I like to have multiple irons in the fire because I want to see which ones are going to perform over time. So that was 1C, 3A, 1.1A, 1.12A. Okay, version 1D. Here's version 1D. Let's take a look. I mean, it kind of looks the same to me, actually. I'm sure there's a difference. Paste it in. This 1D is going to have fewer trades. 1D is actually more productive over the last 140 trades. See, look at 1D. So, again, this will be something we go over in the boot camp. But I consider 1C more of a control because it's got that 600 and something trades. And 1D, which looks back to April also, fewer trades, 140. And look at the 81% win rate and the $90 average net profit and the 3.9 profit factor. Much fewer trades, 14 winners in a row, only 2 in a row losers. But it's only 140 trades. That's still a good amount. But you can just see the equity curve, look, hitting new equity highs today. I mean, that's really what I'm after. We saw this spike, this big jump, some huge trade. We saw that on the other one too. But what makes this different then is probably, my guess would be power of quitting, because it still has the 10 tick entry. So it's probably fewer trades to hit your goals. That's usually what gives you those better. Yeah, so all this is one and done. One trade, win or lose. Keeps things really simple. The other trade was 6 winners or 4 losses, up to 6 trades total. And the one and done just gives you better numbers. You might say, yeah, but you don't make as much on a net profit, but that's deceptive because you do with power of compounding. You actually make more. Remember, this is just a single contract per trade, or 2 contracts in this case. It's targets 3 and trail. But you could see 1 winner, 1 total trade. That's it. That's the difference. And it's always like I've been telling you guys for years and years, less is more. That's where the Backpacktrader logo, that's what it's all about. That's what the whole thing means. Trade less, live more. I mean, we see it over and over again. It just proves itself out time and time again. You don't have to trade more to make more. You might make more today because you take 3 or 4 or 5 winners in a row, but over time, you give a lot of that back. And you work a lot harder, and you pay a lot more costs. Better to trade less and get better numbers, better metrics, better stats. This is far, I mean, the other one wasn't bad. It was up in the 2s, but this is almost in the 4s, right? With an 81% win rate and no losses. I mean, 2 losers in a row. That's all that's happened. 2 losers in a row is the worst losing streak since April. And that only happened, how many times did that happen? 2 losers in a row only happened 3 times since April. Of course, we're talking one and done. So 2 losers in a row would be 2 losing days in a row. It happened 3 times since April. But meanwhile, there's been 14 winning days in a row, 11 winning days in a row, 10 winning days in a row, 9, 8, 7, all the way. You can see. That's the power of the automation. That's what you learn from the automation. And that's not curve fitting. That's the default with one change. Cleaning up the entries by giving that, heating oil's got the bid-ask spread, it's got the slippage, it's got the low volume, so you clean it up a little by pushing the entry a little further out. That's it. Everything else? Nothing. Could I curve fit it more? Could I optimize it more? Maybe I could come up with something better. Maybe bigger targets, for example. Maybe a different place to move to break even. There's a few things you can do that probably is not going to run the risk of curve fitting and maybe even make this better. You can find a maximum excursion target, for example, so that you get out when it hits that number instead of waiting it to pull all the way back down to its trailing stop. You find that maximum excursion so that you're getting out more near the top of the move rather than the pull back to the trailer. Little things like that can make a difference. So Len, are you a Ninja Trader? Because if you are, there are differences in data. There's just no getting around it. And these are small little ticks, and one little tick can just change the entire sequence. It's okay. You just trade your plan, your charts. Yeah, and so maybe there's a small difference, but with TradeStation, there could be data differences also. It depends on which server you're getting data from, because there's latency issues. There's stuff that just happens that we have no control over. But one thing you can double check, go to format symbol. Make sure you're using a 1 tick interval. You can see I'm looking 90 days back. I usually only look 8 days back, maybe up to 15. I'm looking 90 here because I want to get the data so we can look at that performance report out over all those months of trading. Time zone set to exchange time. So I would check on that. And then the other thing you want to check on is when you open up your calculator itself, and I'm sure this is not the problem for you, but just to double check on the general tab, you want to make sure that update value intrabar is unchecked, and it should be. I'm not really sure what else might change I mean, you only have the one thing to change is the 10 ticks on the entry. Everything else I think is default. I don't have key levels turned on. And then also the other thing is this is a continuous chart versus the actual contract month. And there could be a difference. There usually isn't, but there could be. And I have to use a continuous chart if we want to look at the performance report, right? And that's not going to be perfect either because the rollover from one contract to the next has problems. It's not going to be perfect. It's going to roll over on the wrong day. There's going to be gaps between the data of one contract to the next, and then it back adjusts to smooth it out. And so the trades and the patterns are all identical, but they end up on different numbers because of the back adjusting. So I never use key level adjustments on continuous charts because then it's going to adjust around numbers where it never traded at those numbers, those prices, because of the back adjusting. So you can't use key level adjustments. And you know that key level adjustments typically improve the results even more. But you got to use those on the actual contract that you trade, not on a continuous chart when you're looking back 90 days or whatever. So nothing's perfect. Perfection does not exist in what we do. Anyway, that trade finally finished. One and done. And a winner. And a new equity high. Yeah, you use the contract for trading. That's right. What happened? I don't even know how that happened. It just popped up. Opened up a new. I didn't know. So what we could do, let me change this to the contract month. I mean, this just rolled over last week, so I don't even know what it's going to look like here. There may not be enough data even. So yeah, look, this looks a lot different, doesn't it? Is this what yours looks like? I don't know why that looks so different. The only thing I can think of is if the continuous chart, is it still on the U contract? Yeah, so that's obviously different. The V contract is way different. So my guess here, let's look at something. Here's my theory, is that TradeStation is still on the wrong month. Because I saw a volume of only 7,000. Let's look at the prior contract. Yeah, see, look. The volume is only U. I mean, it's only 7,200, and this is the last contract, the September contract. No wonder it looks different. See, that's the problem with continuous charts. It doesn't roll over at the right time. I don't know why. I mean, it seems like they should be able to fix that. But when you look at the October contract, you've got 23,000 contracts traded. Now you know. See, that's the difference. It was still one and done, but it was just a scalp to target 3, and that's it. And the performance report won't really show us much because it's only a few days worth of trading. But look at the performance report. Here's a performance report since the October contract, and basically there's been 11 winning trades and 0 losses. So no losing trades since rolling to October, at least looking 8 days back. And 8 days back, I mean, really, it's looking back too far because the rollover would have been on Wednesday the 18th. So that's literally, today would have been the 4th day. But you need extra data in order to see stuff. So really, you'd have to pay attention only to the last 4 trades. So you got the 23rd. Let's see. This might not be the same. Yeah, VD now. So this is one and done. Oh, I see. It's because it's looking. Remember, it counts exits as trades, and there's 2 positions. So when you look at the trade list, you're seeing the exit of the trailer and the target 3. So really, these 2 trades are 1 trade. So you can look all the way back to the 18th, which is when the rollover occurred, and you can see how it did. Actually, you got to go to here. So you got your target 3, your trailer, your target 3, your trailer. Here, they both was more of a break even. They both got out at the same place. It only counts as 1 trade because you can see units 2. And then here's today the target 3 and the trailer. So really only the scalp trades. Now, if you rolled over 1 day earlier on the 17th, you would have had this nice runner. But you would have been on the U contract probably. So you'd have to see what the September one did. But it just illustrates the imperfection of the tools we use, and yet it still worked great. Just a different outcome today. And the one and done, this is the difference between a one and done versus taking 6 in a row or 4 losses, whichever happens first. One and done wins, you take your money, you're done. Keep trading. The second trade, you're giving your money back, loser. Third trade, loser. Fourth trade, winner, gets to target 3 at least, but you have to wonder, how are you better off with the 2 winners and the 2 losses? If you're trading 2 positions, you're worse off because the second position only broke even on the 2 winners. So 2 losses and 2 break evens on the second position, so you're underwater. Another scalp. Okay, that helps. And then another scalp. So that's how many? 4, 5, 6. So you'd be finished. You'd probably be positive by then, but are you that much more positive with the 2 positions? Probably not. Probably you're better off with the 1 trade, and that's it. You see, this is a good illustration of less is more, right? The next trade wins, but that's trade 7. Really great illustration of the whole Backpacktrader theme, less is more. Might as well keep both these charts just for the heck of it. The rollover will eventually roll over. I don't know why the continuous chart is still on September, but it's a great illustration of the problem with continuous charts versus the front month you should be trading, and how you have to kind of extract the information with a grain of salt and realize whatever it tells you, it's more of an arrow pointing in the right direction than something hard and fast. It's just, more clues. kind of have to be Sherlock Holmes when you're building trade plans and workable, tradable strategies and approaches to the market. Yeah, good, Len. It didn't even occur to me because crude oil, here's the thing. If you look at a rollover chart with crude oil, it always rolls over too soon. Like it rolls over before the volume rolls over. And then you're like, okay, I'm rolling over to a contract that still doesn't have volume with the continuous chart. That's why I always say, and you guys have heard me say this time and time again, the UTA spreadsheet, there's just nothing substitutes for that. Especially if you do it with integrity and honesty and you don't try to cheat it and fix trades at loss. And, well, what if I made the adjustment instead? Oh, it changes the outcome. Don't do that. You just follow the rules. And then the UTA spreadsheet is going to teach you way more. The automation gives you the big answers. But the UTA spreadsheet gives you the magnifying glass and drills down to where the rubber meets the road at the right edge of the chart so that you could experience it as a trader and really learn. And then you realize there's that 5% art and there's your brain that's part of the process also. That's one thing that the automation overlooks is your brain, not the UTA. But let's face it, you're the one trading, so your brain is part of the deal. Yeah, a lot to learn. Both tools have their place. Both tools are valuable. It's when you put it together is when you really come up with the stuff that becomes evergreen and continues to work for you. I mean, we look at these spotlight trades, and these are trade plans that have been going for years. The trade that produced the one and done on crude oil today, this one here on Spotlight, I mean, that trade plan came out years ago. And this is what it did today, one and done. Because this was created not with automation, but with my brain and with the UTA spreadsheet. And automation a little bit, just to get some big answers, like I said. By the way, speaking of another plan, the pound Aussie got long. So the short canceled and the key level adjustment keeping us out of a losing trade because the adjustment was down to 39, so it never triggered in. And now it got long here. You might have adjusted that above a spike, I don't know, but without overthinking it too much, long at 5.7. Trying to get to 69, a 12 pip target. Kind of a small target, but it counts. It's not there yet. The money management is also at target 1, 69. So it hasn't gotten there yet either. This is one of those weird things with the calculator that it accounts for 2 pips of spread. So it wants to go 90% of the way to target 1, 10 pips, but we account for the spread and add 2 more pips to it. So it doesn't let you move the stop up. And it did just miss. Patience, patience, patience. 50 is rolling up and over, trying to hopefully come up. Maybe that 200 moving average up there is going to pull the price up. That's what we're hoping for on this trade. But it's slow as molasses. So a lot going on this morning. Just a lot of movement. Crude oil is up $3.25 so far this morning. Up over 5%. This is a monster move in crude. I mean, $3, that's $3,000 a contract if you were swing trading this and were able to get in at the turning point. Just a quick look. As I compress this down, a lot of this happened overnight. Yeah, so the low point here that I could see was down here at 6 p.m. Sunday. So this is all happening on the other side of the world. Actually, that's on the 22nd still for New York time. But it's the 23rd where trading is happening on the other side of the world. And then there's your move straight up. Literally. You could see it. I don't know, the open, what the open is at 51.90, 51.96, 61.96. And this low down here is at 61.80. So this was before the open, apparently, or it opened and then went down further. I don't even know where the open is. I guess the open is right where it went from 820 to 822, right there, give or take, right at 6 p.m. Sunday, New York time. But I don't know. Yeah, the open's at 61.88, and this one says 61.96. So that's, I don't know. But you get the idea. Look at a bigger range bar, and you'll see that smoothed out, and it looks more smooth on the way up when you make for a larger range bar than 8 ticks. And if you're trading the VC, then, well, actually, this would have been trade number 7 anyway. You wouldn't have caught this. But you could do mini sessions. You could test a 10 a.m. start time and see how that looks, one and done or whatever. A lot you can do. Hey, Keith, how you doing? So I'm just about ready to wrap up here. This is the time to ask any remaining questions you might have. I got a lot to do after this, so I can't linger too much longer. But please hit the like button if you enjoyed this session. I appreciate you guys being here. I know there's a slight pause, so I'll wait a few seconds to see if anyone has any more questions. And I don't see any questions coming in. So I appreciate all your interaction, you guys. Everyone have a wonderful day. Glad it was a good learning session, John. That's why I'm here. That's the whole point. Remember, trading doesn't happen by itself. You have to be the trader. Nothing teaches you more than experience. Yeah, my pleasure, Len. Thanks for bringing that up. All right, everyone have a wonderful day. Don't forget, John will be in here tomorrow. I'll be back on Wednesday. And Thursday, we're doing the Catapult Advanced Boot Camp, all about the Trade Assist automation. All right, see you guys later. Bye.